So what if I told you that the rise and fall of empires, the biggest economic booms and busts, what if they weren't random at all? What if they were all part of a predictable pattern, a big cycle that's been shaping our world for centuries, whether we've noticed it or not?
See, the problem is our own lifespans are just too short. Investor Ray Dalio, whose work we're diving into, puts it this way. We're kind of like ants, so focused on our daily jobs that we completely miss the giant historical forces moving all around us. These cycles play out over decades, even hundreds of years, right under our feet.
So what happens when we really step back? When we look at history not over one lifetime, but say over the last 500 years? Well, we start to see that history doesn't just happen, it rhymes. It follows a surprisingly clear cycle.
Okay, so let's get a handle on this core idea. The big cycle is basically a framework for understanding how great powers rise and then, inevitably, fall. And it's not driven by just one thing. It's a whole cascade of interconnected strengths, like education and technology, that all build on each other, and then a set of weaknesses that also feed on each other, leading to that eventual decline.
But hang on. This isn't about being doomed to just repeat the past over and over. A better way to picture history is like an upward-pointing corkscrew. Over the super long term, humanity does get better. Our living standards improve because we learn, we invent things. But along that upward path, we hit these huge and often pretty painful boom and bust cycles. Progress just isn't a straight line.
And you can literally see this cycle playing out over the last 500 years. For a while, the Dutch Empire was on top of the world. But as their power faded, the British Empire rose up to take its place. Then, of course, the United States. And today, the model points to the incredibly fast rise of China. Each one of these handoffs, from a dominant power to a rising one, follows a really similar, predictable path.
All right, so if that's what happens, the next big question has to be, how? What are the actual mechanics driving this whole thing? What are the fundamental building blocks of an empire's power? To make this feel less huge and abstract, just think about a country's finances like you think about your own. You've got income coming in, you've got expenses going out, and maybe you have some debt. A country is really just the sum of all its parts, all its people, its companies, its governments. The same basic rules apply, just on an absolutely massive scale.
So one of the most powerful engines inside the big cycle is what's called the long-term debt cycle. And it unfolds in this really predictable way. First, it starts with hard money. Think something physical, like gold, and not a lot of debt. But then we get smart. We start creating paper claims on that gold, and that fuels a massive credit boom. Everything's great. Everyone feels rich. The problem is, debt almost always grows way faster than the income you need to pay it back. And that leads to the squeeze, a full-blown debt crisis. This is when the government's hand is forced. They have to break the link to the hard asset, print a ton of new fiat money, and basically devalue the currency to make the debt problem, well, kind of disappear. This exact pattern has happened over and over again for centuries.
And this creates a really dangerous situation. Holding assets like government bonds or even just cash late in a debt cycle feels super safe. I mean, it's been paying you for years, right? But according to this model, it's actually like you're holding a ticking time bomb. The risk just quietly builds and builds until eventually it explodes.
But debt, that's only one piece of this puzzle. An empire's strength is built on a lot more than just its financial system. So what are the other key ingredients?
The model points to 8 key measures of power, and they're all connected. It all starts with having a strong education system, a well-educated population that leads to innovation and new technology, which then makes a country more competitive on the world stage. That, in turn, leads to a bigger share of world trade and a stronger economy. Now, to protect all that trade, you're going to need a powerful military. And all that success, it attracts money from all over the world, creating a leading financial center. And the very last strength an empire gets, and it's the very last one it loses, is having its currency be the world's reserve currency.
Okay, so theory is one thing, but let's see how this actually plays out in the real world. We'll take a quick look at the Dutch Empire as a case study to see this whole cycle in action.
The Dutch were incredible pioneers. They declared their independence, and in 1602, they invented the world's first public company and the very first stock market.
By the mid-1600s, they were at the absolute peak of their golden age. Amsterdam was basically the New York or London of its time. But by the late 1700s, a really bad war with the British exposed all their weaknesses and led to a total financial collapse.
And here's the really crucial point. Look at how perfectly the Dutch story mirrors the model we've been talking about. Their rise was built on those exact strengths: innovation, dominating world trade, and having the world's first reserve currency, the guilder. And their fall? It was caused by the classic weaknesses. They got way too deep in debt, they had tons of internal political fighting, and they just lost their competitive edge. It's like a textbook example of a big cycle decline.
So this history lesson is fascinating for sure. But the real power of this model is when we use it to understand what's happening right now, in our world. So let's try to apply this framework to the present day.
So let's just ask the big question. Where do the world's major powers fit into this cycle right now?
All right, according to the metrics laid out in the source material, the United States is showing a lot of the classic signs of being in the later stages of its cycle. The model points to things like very high debt levels, big gaps between the rich and poor, deep political divisions, and having that dominant but lagging reserve currency. On the other hand, the model places China as a rising power, much earlier in its own cycle. It's now the world's biggest trading nation, it's making huge leaps in technology, but it still lags way behind in that final stage, the reserve currency status.
And check this out. This is a really key indicator of where we might be. The U.S. economy makes up about 20% of the world's total economy, but the U.S. dollar accounts for nearly 60% of all the money that other countries hold in their reserves. That huge mismatch is described as a classic late-cycle dynamic. The special privilege of having the reserve currency often sticks around long after the economic muscle that created it has started to weaken.
So, what are we supposed to do with all this information? What's the big takeaway from understanding this big cycle?
Well, first, and this is absolutely critical, we have to remember that this is a model. It's not a crystal ball. Dalio himself makes a huge point of saying that these are theories to help us think about possibilities, not facts that guarantee a specific future. History doesn't repeat itself exactly, but the patterns of human nature and of finance often rhyme.
Ultimately, this framework isn't about predicting some kind of doom or some unchangeable destiny. Think of it more like a map of the landscape we're standing on right now. It shows us the powerful currents that are at play and the potential paths that lie ahead. The model doesn't tell us what's going to happen. It just asks what might be the most important question of all. Knowing the part of the cycle we're in, how are we going to choose to play the hand that history has dealt us?